and we're very honored to have him today. And today he'll be speaking specifically on angel investment and early investments into startups. Giving the floor to Muhammad.
شكرا ناصر. Thank you, Nasser. Good afternoon, everyone, whether you're attending virtually or in person. I'm glad to be here today. Thanks for QFC for hosting this session. Inshallah, today I'm going to take you through a shorter presentation about angel investments and venture capital. I would like to take you through the concept at the beginning, the market size, and then I'll also share some insights about the facts in Qatar. And finally, I will also highlight some key initiatives that are upcoming that will be launched from QDB along with other partners in Qatar. So to start with, these are my agendas as I just explained. I will start first of all with the market size. Market size is something very important to focus on because it represents the importance of this subject. The venture capital and the angel investments on the sustainability, on the growth of the startups locally and globally. So if we can see over the last 12 years, we have seen huge growth on the venture investment that exceeded $1.5 trillion with more than 200,000 investment rounds globally. This put more emphasis on the importance of the early stage investors and the early stage investments when it comes from institutions, whether they are venture capitalists, angel investment clubs, or even corporate VCs. I will start with the definition. The definition of the angel investor, as you can see here, I wouldn't go through it specifically, but the angel investor, usually the investor who come at the very early stage of the venture, of the establishment of the venture. And we call it angel because he is taking, I would say, a significant amount of risk, but definitely this comes with the return if the venture succeeded. And internationally, I'm just highlighting two definitions from different jurisdictions, the American jurisdiction and the jurisdiction of the UK. The angel investor is usually falls under the accredited investor on these two jurisdictions. And to practice angel investment officially under this jurisdiction, an investor needs to be identified as accredited. And then I'll also take you through our findings of how can we define the angel investor in Qatar based on the Qatari ecosystem. This is the life cycle of the startup or of the venture. And I'm adding this slide here because it's important to show where does angel investor come. And it's also important to show how the angel investors act as the bridge from the individual investment or individual funding of the venture and bridge the startup or the entrepreneur to the corporate investments and corporate venture capital in the future. So usually, the pre-seed usually is what we call it the founder investments, the founder, friend and family investments, where the founder will fund his or her own venture with their own savings, or they will call in their friends or family member to join them at this stage. It's a significant and it's important stage here in B and C where the angel investors come. The angel investor come after the funding stage of the founder and with his friend or with his family and connect the venture, the venture or the startup and take it to the growth stage where the corporate VC comes. So usually we see the angel investor come at the seed and the startup stage. And usually, if I call it in the normal investment terminology, he comes at the seed stage and sometimes very early at stage A. And following that, we see the growth stage where the startup become more mature in terms of funding, become more mature in terms of governance, and become more sustainable. And they start to attract the venture capitalist and the institutional investor. And then following that, we go to the next stage of funding, which is private equity funds, banks, until the maturity, where the startup will have, and it will not be anymore a startup, it will be actually a well-developed venture, where it will go to the IPO stage or the exit stage through acquiring, through mergers and acquisitions. The structure. So there are two famous structures for angel investors to form when they invest in a specific startup or venture. Usually they can go individually without a proper legal structure, I would say, where they invest directly into the venture, and we'll go inshallah through the financial instruments that the angel investor can use. Or they can use an SPV or through an angel investment network or a club, where number of investors form a legal structure and invest in a specific startup as a legal structure, not as an individual investor. And definitely each structure have its own pros and cons. So usually at the individual level, the angel investor is more close to the venture. They act as mentor, as an experienced support member, and advisory member to the startup. At the angel group in a single SPV will allocate a single focal point to deal with the startup. So I always say something. Angels provide a lot of capabilities way beyond funding. Funding could be only one of them. So as I mentioned, capital is one of the benefits that angel investors will bring to the startup, but it goes way beyond that, because the angel investor usually is a serial entrepreneur or a businessman who is very much integrated into the business ecosystem, an investment ecosystem. So an angel investor could bring a network of other investors, other startups who could create synergies with the venture that he invested in. The angel investor, as I mentioned, could be a serial entrepreneur, investor, an experienced individual, professional, who can bring an experience to create more value to the venture. And finally, in the case of individual structure investment on the startup or a venture, the angel investor will bring mentorship, advisory role, and further support to the startup. So the typical, I would say, process of the investment is in this slide. I'm not sure if it's visible to the people attending virtually, but I'm going to just say it. So it starts with the deal sourcing. Usually the angel investor is very much integrated into different incubators, accelerators to source the deal. I mean, from the overall deal flow that an angel investor or angel investment network that receives, they could only invest on no more than 5% of the overall deal flow that they see. They see multiple companies, and then they start the next process. So the next process is the deal screening. It's a very high level screening in terms of concept, sector, and if it passes this phase, it goes to the initial feedback, where the initial communication starts between the angel investor and the startup. Following that, usually there is something called a pitch, where the startup will have a presentation for the investors that wish to acquire a stake in the company. And then we go through the process of the due diligence. The due diligence basically is one of the important steps, and in this step, the investor will go through all the details related to the investment that he is investing in. He will understand the legal structure. He will understand the value of the assets on this venture. He will understand where does the IP located. He will also understand the company that he invested in. Is he investing on the holding company? Is he investing on one of the subsidiaries, or he is only investing on the IP? This is the first element in terms of the legal structure due diligence. And then we go into the financial due diligence, which is basically looking at the full financial analysis in terms of discounted cash flow, a comparable analysis with a company that operates on a similar sector. And it's just a long list, of due diligence process to give the comfort for the investors to step into cap table of this company. And then it's a negotiation of the terms and condition. So basically it's a discussion of the valuation, the amount of stake that the investors are acquiring, the type of the shares, whether it's a common stocks or preferred stocks. And it very much depends on the structure and the financial instrument that the investors are using. And then the investment happens and takes place. And then there is the post-investment support, which is something very important to the startup when an early stage investor steps into their venture. So here we'll go into kind of a technical discussion on the financing methods of the early stage company. So we have, I would focus only on the three key financial instruments. The first one goes through a price round. The second one is very common for existing investors, which is a loan or a bridge round. And the second instrument is the convertible, which comes on at the shape of convertible note or a safe agreement. So the price round. So the price round, and the purpose of the price round is to come at a specific valuation and to own the equity immediately in the company. So you don't need to wait for the next round of funding, and you will become immediately a shareholder in the company. And why does the investors step into the price round? Is merely to get the immediate shareholding, and in case if they wanted to be a board member of the company, so it makes more sense to go at a price round and secure that board seat. Within the price round, there are two types of shares that are very popular on the price round agreements, which is the common stock and the preferred stock. So usually the common stock is the simplified type of investment, where it comes at a low cost, and it comes when the investor or the investment network want to be very close of the founder, and they will be monitoring the company and supporting him throughout the process. So they will have kind of an influence on the company, so they go with the common stock. A preferred stock usually is kind of a safe approach for the investor, because it protects them from the downside, and also give them most of the time the priority in case of liquidation. I'm not going to spend too much time on that, because this is just a bridge round or a bridge loan for existing investors. So sometimes to support the company during a crisis, and we have witnessed that, by the way, last year when COVID hit the globe. It's a very popular instrument where the existing investors provide kind of a loan or a bridge round to support the company overcome certain crises. In case of the loan, it's going to be repaid at certain terms and condition and interest rate. If it's a bridge round, there will be also kind of a, I would say, a certain duration where the startup need to repay that loan, otherwise it's going to be converted into equity. And definitely the second instrument will put some pressure on the founders to react quickly and efficiently, because the conversion of the equity into the venture mean a dilution for the existing shareholders. And no investor and no founder want to be diluted in the venture. This is just a very general, I would say, statement. The last element, or the last instrument, sorry, is the convertible. The convertible come at the form of notes and come at the form of SAFE. And SAFE is a shortcut for simple agreement for a future equity. So I will start with SAFE. So basically SAFE means that you are promising, you are funding today and promising to buy certain stake at a certain valuation on the future. And this slide will give you kind of a high-level comparison between both instruments. So in case of the convertible, it is effectively kind of a loan. It's going to be converted at certain period of time, unless it's stated on the agreement that the startup will have the right to repay it with certain interest. It's very similar to the bridge that we spoke about earlier, and it's considered as a debt on the balance sheet of the startup until the conversion time. While the SAFE, it's just a promise to buy a certain amount of share at certain valuation cap, which means that I promise you to invest today a certain amount of money, and I'm going to convert it at the next round. And I will set up a certain valuation as the cap. So my conversion will never exceed that cap we agreed on, even if the startup raise fund at a higher valuation. So I'm protected, or the investor is protected, in this case from the higher valuation in case there was, I would say, unplanned growth. The flexibility, I think the convertible is more flexible in terms of maturity, in terms of interest rate, while the safe note is fixed. You just set up the amount that you're investing, you set up the cap, and that's it. And you are converting on the next round on that basis. Usually the convertible comes at any stage, and the safe comes at the seed stage. And in terms of valuation, the convertible sometimes will have a valuation and sometimes will have something called a discount factor, where I say I will join the company at the 80% discount rate of your next round of valuation. Meaning, if your company was valuated at $100 million in the next round and they set up a discount rate of 80%, then that means that I'm joining at $80 million. And it will give me a bigger stake in the company. This is mainly to protect the investor. On the safe note, it's always a valuation cap. So here I want just to deep dive into the angel investments, what sort of return that the angel investors look at, because angel investors come at a very early stage. So the returns that he is looking at is not the return that he is looking for at any fixed, I would say any normal commodity or fixed asset instrument or normal equities. He's looking for much higher return because effectively he's taking much more risk, and he is betting in the company at the very early stage before it even, and sometimes before it even had a revenue or a product to sell in the market. So as I mentioned at the beginning, number one, we'll see that the first and the initial round comes from the closer friend and the family members. And then the most critical round, the round of the angel investor, where they step in. And on number three, we're talking about what is it for angel investors. And here we can see that the annual rate of return and the average annual rate of return any angel investor would like to see from his investment is usually something between 25 to 30% annually. And in this slide, I just want to highlight, the sizes of the investments on different regions. And the takeaway here, if you look at the right side, only 10% of the angel investments on early stage ventures were around 200,000 euros, while the rest of the 90% is usually small tickets. So this gives you also an idea about the very common ticket size that angel investors look at. And here I'm just shedding a light of the importance of the angel investments, and I'm going to stop here and maybe go in depth into the details of this slide. So we noticed that 90% of the equity provided in the startups on US are an external equity sources, so mainly angel investors and venture capital, and this resulted in increasing the sustainability of the company by 4 years. So whenever there is an early stage company invested in by an angel investor or early stage venture capitalist, the survivability of the company increased by 4%. And this is mainly, it's not random, right? Because the angel investor, as long as you have more shareholders, whether they're venture capitalists or angel investors, those people will ask for a seat on the board. They will act as advisory board members. So they will help the founder directing the company to the right direction. They will help the founder to create the right governance structure required to increase its sustainability. And this is definitely because they want to protect their interest and they want to see the growth of their investments. So that resulted in the increase of the survivability of the company. And I spoke about the experience, and we noticed that more than 60% of the investors are actually serial entrepreneurs. So they have been through all the challenges of any early stage investments or any early stage venture. They have been through the ups and downs, and this is a huge amount of experience that can be shared when they join a board membership or an advisory board of any early stage company. And below, we can see also the growth of the number of investors. And this also stresses on the importance of this type of investors on the companies. So now I'll just shed a light on the Qatar ecosystem in terms of investments and what everyone in Qatar have done over the last couple of years. So in the last year, we noticed around 10% growth of the venture investments in the Qatari companies, and most of them were in the form of a bridge loans or a bridge rounds to support companies overcome the challenges of COVID. Accelerators played a very important role, and they represented more than 30% of the funding of the startup. And we also noticed that companies that graduated from accelerators and incubators have a survivability rate of 46%. And the last element is the digitalization. So this type of investment is very, rely very much on the digitalization and technology. So digitalization has accelerated last year when COVID hit the globe and empowered all these startups to grow, to find the new solutions. And by default, this will also require the investors to invest more in the company, which resulted on the growth that I've spoken at point one. So from 2016 till 2020, this was the scene of the venture investment and its impact in Qatar. We have witnessed more than 200 million Qatari riyal invested in the startups, and out of that 120 were invested in funds that indirectly impacted the Qatari ecosystem. We have witnessed 92 startups funded and a total transaction of 107. And I didn't present the growth rate, but if we have seen the growth from 2016 in terms of number of deals and the sizes, it's a huge increase in terms of investments, because again people started to realize the importance of this topic. And in this slide, I just want to focus maybe on QDB, since we launched the venture capital fund 4 years ago. QDB launched a $100 million venture capital fund to invest on seed and growth companies, as well as funds in Qatar, and in some cases international companies where there is a Qatari element in it. So over the last 4 years, or 5 years I would say, the capital invested was close to 180 million riyal. There were 2 funds. One of them is the general fund, and the second one is the Fintech specialized fund, which started last year. We have also invested, we have done 8 funds investments and 7 funds managers. Some of them have invested in Qatar, and the others already established in Qatar to indirectly impact positively the Qatari ecosystem. And in terms of the transactions are beyond 50 transactions. So here I'll just also talk briefly on some of the plans that are ongoing in terms of how can we do more for the angel investments in Qatar. And we started that in QDB, but definitely this is not happening in the isolation of the other partners in the ecosystem, and we are working with the other partners on the ecosystem also to further grow this industry, I would say. So in this slide, I'm showing the value chain, and I want to tell you that we have done a global benchmark, and we've done also a primary research on the challenges of the angel investments in Qatar. We looked at the views of the investors, we looked at the views of the partners, institutions, as well as the startups. And we have identified that value chain, and within each stream, there is a challenge that needs to be tackled. And within this challenge, we are thinking of what are the initiatives that we can bring to add more value to the investors. So we will start with the first channel was the angel sourcing. So we know that we have angel investors in Qatar, and we know that there are people who have the desire to invest. but it's a matter of how can we support them structure this further. The other element is the selection and onboarding. The onboarding and the selection is, I mean, it depends on many criteria. We need to understand who are these angels, what is their understanding of the angel investments, and support them and onboard them on a central platform so we can create that matchmaking between the startups and the angel investors. Because if you have any amount of capital without having the proper connection and the matchmaking, there will not be any transaction place. The third element, which is very important, it is the capacity building and the enablement. The capacity building is a very important subject. Investment is a very sensitive topic. There is risks associated with this activity. So I believe it's very important for us and for other ecosystem players to support with building the knowledge, with building the capacity of the investors, and also deliver the right understanding of what those individuals should do and what should they expect and how should they structure their deals going forward. Similar to the angel sourcing, we have also the challenge of the deal sourcing. Again, we know that we have multiple companies in Qatar through different platforms, but we are missing that central platform to connect them. Then the fifth element, which is very much related to the third element, which is deal screening. So how can we help individuals ensure that they are looking at the right deals, that they are looking at the right deal flow, and the companies that they look at are filtered ahead of time, are filtered before it reaches them for the due diligence, and then deal execution. So it's very, and in the deal execution, by the way, there are multiple elements. It's also important to coordinate with different stakeholders to understand how can these investors today execute those financial instruments, because these financial instruments are not applicable in every jurisdiction. So it's also a challenge that we are working on and we're trying to overcome it to support the investors in Qatar. And the funding growth and the post-investment support, this is mainly structuring those investors into groups so they can have their own space, they can have their own offices to extend the support to the startups. And the last element is the exit ecosystem. After you invest on Series A, Series B, Series C, definitely you will be looking at the exit. So what can we do to support the startups go to the right exit, and also for the individual to get the value of their investments? So within each stream here, we have identified a couple of activities, a couple of initiatives. I'm not going to present them today, but this is just a high-level overview of what's happening and high-level overview of what we are doing on each stream. So within these all streams, we have identified the growth barriers. One of them was the policy framework and the regulation. And this is mainly around setting up the proper structure. Today we do have unregulated structure, which is very friendly, but we are looking also for what those investors can do if they want to expand further. And the other policy framework that we are looking at on how to make the relevant regulation relevant to the financing instruments. Number two, I think I spoke about it earlier, the lack of capacity and knowledge. So this session actually is a clear exercise to overcome this challenge. So we're speaking today and we're trying to deliver the ideas and the knowledge related to the investments. The absence of the community, as I mentioned earlier, we do have investors in place, but then we need to structure them in a proper community and centralize the platform. Number four is no incentives to attract investors. So the investors would like to see some lead investors in place that support them on joining a specific round, to give them the validation and the comfort that this company does make sense. So we need to see also more lead investors, and we need also to see more incentives to attract investors. And the last element is lack of communication in this topic. So a lot has been done on the startup sphere, And now we think it's the time also to start to talk about what can we do for the investors and venture capitalists. Again, I'm going to skip this slide, and I'm going to go to this slide. It's an important slide. And the role that we envision QDB as a government entity should play is the enablement driving and the, I would say, community communicator role when it comes to this topic. So our role on the enablement mainly to provide the right to support in providing the right infrastructure for the investors to operate today. So we try to support them overcoming all the relevant obstacles when it comes to policy and capacity development. A driving role. So we want to lead and start with the other partners in the ecosystem to build the community. And we want also to start and discover what is the possible incentives that we can provide today. I mean, we do have, we started somewhere in 2016 with the first venture capital fund in Qatar, but we want to see how can we utilize this to support and incentivize the investor this time and encourage them to enter this industry. And the last element is we want also to support in the communication and community development. So we want to ensure that this topic is being covered by different partners through different platforms, and investors will also have their focal point to speak to whenever they have any question or a clarification. So, and I just want to say we haven't, so we are not waiting to conclude what we are doing to start. We have started actually 2 years ago. And in this slide, I'm just presenting some of the activities which we in QDB established, and I would say we have done it over the last 2 years. So in June 2020, we conducted the first angel investments panel discussion where we hosted the expertise from Europe, and we had the European Business Angel Network with us to run this panel discussion. On October 2020, through QDB incubation, we started the cohort 1 of the Qatar Fintech Hub, and in alignment with that, we launched the Fintech investment scheme that is specialized on investing on the Fintech companies. And today, we have invested in more than 30 companies within the Qatar Fintech Hub in cohort 1 and cohort 2, and inshallah very soon we are starting with cohort 3. On December 2020, we launched the first virtual investment forum, and along with the investment forum, we also created the first investment platform to act as a central platform between the investors and the startup. On March 2021, we took the investment activities globally, and we cooperated with the Skolkovo Foundation in Russia to onboard 9 of our startups to something called soft landing program. And the soft landing program mainly to help our startup get access to the international investors to look for partnership and investments. On May, we continued these efforts through the Startup Village, one of the key events on Russia. And we had 7 companies from QDB portfolio participated on the Startup Village. And we had one of the Qatari companies as the winner in that pitching session, and it was the company Elslab, which produces the automatic cooker. And in June, we had also a great milestone where we have participated on SPIF, and we had 9 companies with us from Qatar participated on the Qatari Pavilion on St. Petersburg International Economic Forum 2021, and they pushed in front of Russian and international investors. And out of the 3 events that we hosted in Russia, we noticed a great impact to the Qatari companies. We have a potential partnership and investment deals of more than $10 million, and also these efforts materialized with more than 4 MOUs signed between those startups and their counterparts from Russia. In June, we launched the first venture capital report in cooperation with Magnet, the leading data institute in MENA region. And this report today acts as the baseline and the first reference point for any international or local investor interested in the venture capital industry. And in July, we hosted the Angel Investment Bootcamp, and we were also joined by our partners from Qatar Financial Center Authority to speak about the Angel or the Investment Club at this session. And this was one of our efforts to tackle the access to training and to build the capacity. So these are some of the initiatives that we started 2 years ago, along with our development journey of the angel investment strategy in QDB, which will be announced soon, inshallah. And if you notice at all of these initiatives, I mean, and all of what we spoke about, we are, I would say, tackling 3 elements here. We're tackling the element of providing access to finance for our companies, and we believe that this type of investment is essential. We are also tackling the challenge of access to training. We believe that the capacity building is important to create the future asset managers in Qatar. And the third element that we're tackling also to the access to data and information. And the access to data and information is very important because any investment today should, I mean, any investment decision should be based on rational and should be based also on the facts that the investor can rely on to build his case before he execute or before he enter on any investment agreement. So with that, I'm concluding my presentation, and I will leave it for question and answers. So I'll open it up for discussion. Hank, please.
Question. So I'm a small angel investor myself, and I always struggle if I put some money in, when do I get my money back? Because I always anticipate I need to get it back maybe in 5 years. So do you have some rule of thumb that typically, what is the sort of average sort of time frame? If you start as an angel investor, when do you get it back? What are the exit scenarios?
It's a very good question, Hank, and thank you for bringing this question. And this goes back again to the life cycle of the angel investors. Maybe the second slide that I presented. So in terms of exit, it's first of all, it depends very much on the investments and the company that you have invested in. So if you're investing in a good company that's growing and you're monitoring it growing, you have always the option to exit at the next round of funding. But then again, it depends on what is your return requirement and what is your desire and what is your investment strategy. How much are you looking to get in terms of return? So the second round or the next round of funding is always your first step for exit. And I'm here assuming in a growth case. And the other, I would say, way of exiting the company is to wait till the last stage, which is either to be acquired through an M&A transaction or through an IPO and listing on the public market. So it's very much, it very much depends on the strategy of the investments. If we are looking at the life cycle, so usually the investments last for 18 months to 24 months maximum until the startup needed to go and raise their next round of funding. So this is also to tackle your question on how long will it take me to materialize or to get back my money with the interest or with the gains. So you are looking at a period of 18 to 24 months until the next round of funding to decide whether you want to be in, whether you want to increase your stake, or whether you want to exit with the new investors onboarded into the company. Hassan.
In angel investing, not in Qatar in general, is there a concept of crowdfunding?
Well, yeah, this is an important question, and I think many people get mixed between the crowdfunding and the angel investment. So the angel investor could invest through crowdfunding, but they are two different concepts. The crowdfunding is basically a transaction where multiple of investors, whether they are individual or institutes, come through a single platform a single SPV, a single legal structure, and they invest together in a specific company or a specific round in the company. This is the only relationship between the angel investments and the crowdfunding. It became very popular, by the way, recently. The crowdfunding became very popular because globally it started to be exercised through digital platform. Definitely this is something require regulations. We don't see it everywhere, but it became very accessible because it's now digitalized. But again, there are two different concepts in terms of crowdfunding and angel investments. Hamid.
Thank you, Mohammed, for the excellent presentation. So, if someone's thinking about entering into angel investment, where should he go to get more information?
Well, inshallah, on what we are building and developing at this stage, we are hoping to act also as an information platform for the angel investor. Inshallah, soon we will announce our angel investment program, and it will act hopefully as your central point for angel investment information. And it very much depends on the information that you need, Hamid. So, if you look at the information of in terms of data, so we just started providing the relevant data about the investment, and this can be you can find it in our report, which is available on the website. In terms of the training, we continuously ensure that we have regular training courses, and the purpose, by the way, of the training courses is not only educational, but it's also to bring you with the like-minded investors in one room and to discuss, because the angel investment and the venture capital is a very, I would say, highly, it rely very much on the relationship and the social element, because you rarely find a round of funding where you have one angel investor investing. It's usually either a group of people forming their own SPV or a group of people that they know each other and investing on the startups.
Thank you.
Thank you. So, any other questions? Okay. So.
This one last question, I think it's directed to Hank. Hank,
you want the mic, Nasser?
the last question is, what does the QFC have with African startups and businesses? So, what does the QFC? What did the QFC do as partnering with African businesses and startups? Recently, we did the Rwandan MOU, which is with their financial center. Anything else you think is interesting?
I think Qatar likes the African continent very much. You see a lot of investments going into Africa, and you see Qatar Development Bank, Qatar Financial Center teaming up with countries in Africa, like we signed the MOU with Rwanda. For now, I think what we can offer is a fast track, like introduction. If there's an African company coming here, they have our phone numbers and we will help them. And the other way around, if Qatari companies would like to do something there, we can introduce them. I think that is the best situation right now, but for sure there will be more. And specifically, I think there are great investment opportunities for probably angels in Africa. So maybe after Mohammed is ready with Qatar, you can export our angel program into the African continent.
Of course. Thank you, Hank. So thank you, Mohammed, for this insightful presentation. Of course, we're working very closely with Mohammed, and he's handling the Fintech fund in QDB, and the Qatar Fintech Hub is very important to us. And thank you very much, Mohammed, and stay tuned for more partnerships with QDB and Mohammed and Precise. Thank you very much.
Thank you. Thank you.